Hey, my name's Channing Moore. I'm the broker owner of Bayou Mortgage right here in Louisiana. And one of the most common questions we get asked is, how do I get my credit ready to purchase a home? And so it's a big question. It's an important question. And it oftentimes requires time, patience, and effort. And so we want to give you today, I want to give you today everything you need to know about that process so you can get started, whether you're ready to buy a home in a month or a year, so you can know exactly where you're at. Well, like I said, today we're going to talk about how to get your credit ready to purchase a home. But in order to understand how to get it ready, you first have to understand what it is and what it is not. And your credit and your credit score are an indicator of your ability to repay debt. That's all it is. It is not an indicator of your finances, of your employment history, or of anything in that nature. It is simply a number given to you that indicates to banks and lenders how well you will repay your debt, how often you repay your debts. And there's a lot of different factors that determine that number, but primarily credit scores are designed to show people how well you pay back debt. And so when you talk about debt and when you talk about understanding your credit and your credit scores, what you want to understand is how your credit works and how it operates. And there are a lot of different programs out there like Credit Karma, Mint.com, MyFICO, and others that are going to show you your credit report. They're going to give you a credit score, and they're going to show you all kinds of trended data that you can that's going to be made available to you as the consumer to be able to see what's going on with your credit report. And they're not all created equally. So we're going to talk a little bit about that. And so the first thing to understand about something like Credit Karma, CreditWise, MyFICO, or not MyFICO, but Mint.com, the credit score that's given to you by your credit card, Capital One, Discover, whatever, is they are not the same scores that the lender is going to use when they pull your credit. Now, spoiler alert, the only way to get that is either via the lender, like a mortgage broker like Bayou Mortgage, or through myfico.com, which charges, I believe, about $60 for them or $40 a month. And there's a lot of features built in with that. Those are the only two ways to get your true mortgage score because they're the only companies out there that are providing it. So, but what Credit Karma and Mint.com, what's the deal with those? Like, why do so many people use them? Well, they're a really good indicator of what's on your credit report, number one, and what's being added or taken off because it's real time. So every person right now can go to annualcreditreport.com and pull a copy of their credit report. And you can do this anytime you're denied for a loan or once a year. And I think even with COVID, they may have updated those guidelines even more regularly. So you can get the report, but you don't see the score and you don't see things happening in real time. So with Credit Karma and others, what happens is they give you this data in real time. And yes, they do give you a score, but that score is not your mortgage score. That score is not even a FICO score. That score is a different calculation that Credit Karma uses to come up with your score. And it can be off tremendously, 50 points or more, but it is a good indicator, right? If you are a 500 credit score on Credit Karma, you're probably not going to be a 700 credit score on your FICO mortgage score. Also, you could be a 650 on Credit Karma, but only be a 600 on your mortgage score. So the scores are different. And what a lot of people may or may not realize is you have, people understand you have Equifax, TransUnion, and Experian, but within each of those bureaus, there are different scores. So within Equifax, TransUnion, and Experian, each one of them gives you an auto score. And that score tells the banks how well you repay your auto loans. Each of them have a credit card score, and that tells them how well you repay credit scores. There might be a FICO score 9 or someday 10 that, maybe the banks haven't adopted yet, but it's the future scoring model that's going to be implemented soon. And then, of course, you have your mortgage scores. And again, like I said, the only way to get those scores is through myfico.com or through a bank or a lender that can pull those scores for you. And each of those scores they're going to be different. They're going to have different scoring mechanisms. Myfico.com gives you all of those scores so you can see how you rate across the board, no matter what type of purchase you're looking to make. And it is by far the best credit monitoring tool that exists for the consumer, but it is not free like Credit Karma. Now, just as a quick side note, when a product is free, typically you are the product. Facebook doesn't charge, but they collect your data, and it's no different with Credit Karma. They are collecting your data and then using it to have other people, which is why when you log in, all you see is selling you this and selling you that. And so the product is free because they are selling your data to advertisers. So anyways, but it's a good indicator for what's going on, but it isn't the most up-to-date or the most accurate. So, but your credit score is simply how well or how likely you are to pay down your debt or to pay off your debt. And we like to tell people it's by no means the minimum score required, but every person should shoot to be at least a 640 credit score. That's going to begin to open up most financing programs. That's going to begin to provide you the opportunity to get better rates on the government lending programs such as FHA, which actually allows you to finance as low as a 500 credit score with 10% down, or a 580 credit score with 3.5% down. But that 640 is really where multiple lenders open up, because we're a broker, we shop multiple lenders, and you start to see those better credits, those better interest rates. So now that we understand how we can make our credit, or how we can understand our credit report and our credit scores, let's talk about how we can boost or build our credit, okay? And the first thing, the number one absolute first thing is pay your bills on time. Late payments have a tremendous impact on your credit score. One late payment can drop your score 100 points, and it can take 6 to 12 months or longer for your score to recover. So you really want to make sure that you're paying your bills on time. If you currently are behind, we have COVID. We certainly understand lots of crazy things are happening to people out there, losing their jobs and all those different things. Your number one goal then is to get caught up, is to get out of those late payments. Because every month that bank or that lender reports you late, 30 days, 60 days, 90 days are real bad, 120 days you're about to get charged off or go to a collection, your score is just going down, down, down. But every month when you get caught up and you make payments, that late payment has a less and less impact on your credit score until eventually you see your score recover, as long as you've been making your payments on time. So you definitely want to get caught up on any late payments before you do anything else, because you're likely not going to be able to get financed if you're still behind on something. It's going to be very difficult to do so because of the impact to your credit score. And a lot of times we'll see underwriters ask, hey, they have to get this caught up before we'll clear this loan. So you want to get those payments done on time. The second thing that you want to focus on is your balances and credit limits. So if you have credit cards, we're not talking about student loans, we're not talking about boat loans or auto loans or anything like that. Let's talk about revolving credit. These are typically credit cards, most frequently, or some type of line of credit that you might have, excluding a HELOC. Those are factored differently. You have a limit on what you can borrow. So let's say that you've got a credit card and it's got a $1,000 limit. Well, if you exceed 30% of that limit as a balance being reported to the credit bureaus, which would be about $300 on a $1,000 credit limit, then your score begins to get negatively impacted. And then as it gets to 500 or 50% of that balance, then it gets real bad. 75% gets worse, and 100% you could see your score take 100 points or more, because the credit score is an indicator of how well you pay debt and not how well you handle your finances. You might have the money to pay the card off in your savings account, but to the credit bureau and the score and the algorithm that the score is based on, it appears that you're financing your lifestyle and that you aren't managing your debt well. So one of the best and quickest and easiest tips is to pay down your balances on your cards. So if you have only one card over, pay it down. But if all your cards are over, then you kind of get hit with it two ways, because now you're getting hit with it being over 30% on each individual card. But the algorithm also takes a look at your overall debt or your overall revolving credit. And so if your overall revolving credit gets over 30%, now you've got to pay them all down to get it under. And we generally recommend you can pay down most cards to zero, but you definitely want to leave one with 5 to 10% of the balance on there, or else you could actually see your score go down. But you want to get both individual cards under the limit plus your total overall credit. So if you've got a $1,000 card, a $500 card, and another $1,000 card, you've got a total credit limit of $2,500, and you've got $2,000 worth of balances between those three cards. You've got to get that paid down to 10% of the balance, which I think would be somewhere around, or under 30% of the balance, which I think 30% of the balance would be about 750. So you want to get that under 750. So you've got to be able to get those paid down in order to maximize the best possible score for you on your credit report. The last thing I want to look at is the accounts and like what kind of accounts that you have that can help your credit. So number one is a credit card or a revolving line of credit. That makes up 35% of your credit score. And so if you've had prior credit issues or if you've never gotten a credit card before, you are not maximizing out your score. The reason for that is because it's 35%. So if you are like a 580 and you want to be a 640, it could literally be as simple as getting a secured card or a credit card opened up, putting $5 on it, letting it report, and then you could see that score jump in a month or two. And it's important to note that I said it in the beginning, when we're talking about building your credit, we're talking about something that does take time. If you have bad credit, you didn't get that way overnight. And if you have no credit, same applies. You have a little less work to do, but it just takes time. It could be a month, could be 6 months, it could be a year. It really depends on your individual situation and how much stuff you have to actually work on. But one thing that I want to be absolutely clear about is that your credit can be fixed. This is not some situation where you are just a hopeless lost cause, unable to ever fix it or make it better or do anything to improve it. It is absolutely something that you can fix regardless of how bad it is. It just takes applied effort and a little know-how. Now, for some of you, this is, like I said, as simple as getting a credit card, paying your balances down, and getting caught up on your payments. For others, you might need to enlist the help of a credit repair company or something like that. It doesn't necessarily have to be the first step, but it could be something that needs to be done. So, having a credit card is going to help boost your score. Having an installment loan is going to help your credit profile. You want to have each of these things in your credit profile in order to have that credit score that you desire, in order to get, a decent credit score. Now, here's a question we get a lot because of Dave Ramsey followers and things like that is, well, can I buy a house if I have no credit score? Well, first of all, it's very rare that we ever see anyone with actually no credit score. Most of the time it's low because they've closed all their accounts off, but they still have that history that stays on there for 10 years. So you would have to have not ever used your credit or have not used it for quite some time in order for you to actually go down to zero. 9 times out of 10, you end up low. But either way, whether you have no credit score or whether you have a low credit score, you're going to get treated the same. It's actually more difficult to purchase a home with no credit score than it is with a low one. But either way, the rate you get will be basically the same as if you had low credit score. All right, so finally, the last thing I want to talk about is how do you deal with negative information? And there's one really important thing I want to get out of the way, and that's don't pay collections, okay? A lot of people, they pull up their credit report like, oh my God, I owe these people money, and I need to fix my score, so let me just pay off all these collections. Well, be warned, if you do that, the way the credit scoring algorithm works, those collection companies will report the payment as recent instead of the old collection that it likely is, and it will cause your credit score 9 times out of 10 to drop. The only time we recommend you pay off a collection is if it's new, and if it's a new medical collection, they are required by law to have them deleted off the report if you pay it, and that can help your score. And other collections can help your score if they agree to delete them when you pay them. But if they don't delete them and you just make the payment, it really doesn't help your credit score. In fact, a lot of times it hurts it. The second thing when you're trying to fix negative information on your credit report is disputing wrong information. So if they've got wrong addresses or wrong things marked on the trade lines or anything like that, you want to dispute that information. You want to get them and force them to update that information to be as accurate as it's supposed to be. Now, this is the deal where, there are certain letters and things which you can download online to do this in the proper format. If you do it online versus sending in letter, it could affect you negatively. But this is where, if you're having to get into disputes and things like that, it could be a good thing to go ahead and hire a credit repair company, because they have the knowledge and experience and the systems to send these things out. And every time they come back and it doesn't get deleted or it doesn't get fixed, they just keep perpetually sending them out. But I will tell you that not all credit repair companies are created the same, because some of them will just take your money forever. You want to work with one that tells you and gives you a proper timeline of when they think this can be done, so that there's some endpoint, because most of them do charge you monthly in order to work with them. So if you're going to try to fix your credit, I definitely recommend doing some research yourself. If it's as simple as paying down balances, getting caught up, or maybe even getting a credit card, that's totally something you can do yourself, and a lender can help you. If it gets beyond that, you either have to learn how to do it on your own, and sending out these letters and disputes and these types of things, or you can hire a credit repair company to do those things for you. So anyways, these are some tips on how to build your credit to get yourself ready to purchase a home. As always, if you have any questions, give us a call. The number will be below. Visit us on our website. We're happy to answer any credit-related questions that you have, and helping you get on that path to home ownership. So I'm Channing Moore, the broker owner of Bayou Mortgage, and I look forward to talking to you soon.